Where's the link?
You should see it if you Google or if you YouTube because Bitcoin.
Oh, okay, gotcha. Yeah, it says we're live. We are live. We're live right now.
That's right. Let me just pull it up here quick. I gotta turn these ads off, man. They're annoying to look at. Okay. All right, everybody. Thank you guys for tuning in once again. This is Market Check slash Market Talk. I guess it's kind of both because we missed the one in the middle of the day. More technical difficulties, whatever, technical drama. But here we are, coming to you a little bit later than initially anticipated because once again we had to get OBS set up. But thank you guys for bearing with us and thank you guys for being here. I am your host today, Max, joined by, I guess, technically our co host, Tucker, handsome guy to my left, right there. And we're moving over to YouTube, guys. Again, if you are new here, we're a financial media company called Because Bitcoin. We don't just cover Bitcoin, but we surely give it a lot of attention. By nature, we are all crypto traders or equity traders. We have news, we got articles, we run spaces every single day, interviewing projects, traders, et cetera, et cetera. And if you would, if you're joining now, please just hit that thumbs up button for us. Apparently, it does wonders for the algorithm and really helps us gain some traction. But today, we're just going to be talking about the market. There's a lot to break down today. We took some very interesting trades as well. We got some SPY exposure, some crypto exposure, and we're also, I think, playing a little bit of energy as well. I know I'm going to leave that to Tucker. He's got a really awesome play, actually. But yeah, if you guys would, hit the like button, and if you don't already, please subscribe for us. We're a young channel. We're working very hard to make YouTube our new home base, and I give you my word, we are going to deliver consistent, actionable content to you on a regular basis. And just a quick reminder, we are also running a 1 week free trial in honor of Memorial Day for our premium Discord service. You will see that down below, and there's also a banner right there, premium Discord free 1 week trial. um, Definitely give it a try. I mean, it's 1 week free. Even if you're like, man, I don't want to pay that, come hang out for a week, say what's up, at least give it a try because it doesn't cost you any money. But with that said, we're going to talk about the markets, get into it a little bit today. So quick summary on my day today. um, I was watching what was happening this morning on Spy. And again, if you didn't catch what happened yesterday, my thought was that Spy was more or less doing something we could consider as vertical accumulation. And again, a thought I was having, we went over this yesterday, and I'll do a quick summary for those that weren't here. QQQ did something a couple weeks ago very similar to, where it was just doing this like methodical little curl upwards, very slow. Every drop certainly felt like it was completely over, and every pump up felt like we were about to, blast up 5%. So QQQ did it a couple weeks ago. ETH did it like 4 or 5 weeks ago. And I'm starting to see a very similar pattern with SPY taking place. And I said to myself, all right, we had a little gap down on SPY. And actually here, I'm gonna move over to my screen. Hang on, guys. Bear with me. Okay. Let me drag this. We're gonna get this all set so it looks nice and pretty. Okay, but I'm watching it this morning and I'm saying, okay, let's start on like the 1 hour. We've got this really sort of nice curl up here where we're having a sequence of just coiling, right? Low, 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 low. I mean, technically lows, lows, a low formed, and it's slowly curling up. And we saw, again, really quick summary for those that missed it. We saw QQQ do something very similar. Basically, this move right here. It's not going to be perfect, right? But we're going to use it as a guide. Okay, so let's go back here. So I was watching this happen, and then on the really low time frames, I said to myself, okay, I've seen this happen before where we've got a gap in the chart, a gap down from overnight in the chart. If we can flip this gap, if we don't get stuffed at this gap right here, if we don't come back down like this and get stuffed right here, and we actually flip the gap, we're going to send this thing, especially because I feel like there's going to be this secular rotation into the S&P 500, given that it potentially has some catching up to do relative to what we saw the Dow do in late last year, and then actually just a couple weeks ago with QQQ. So where am I targeting? Back of my target is this high right up here. Back of mine target would be the August 2022 high. Again, we're looking for symmetry across the indexes. We saw it happen right over here on QQQ, on NASDAQ. So going over to ES, which again is just S&P 500 futures, this is what we were looking at. I waited for that gap to flip, and I said, all right, let's take a stab at it. So we saw it flip. And I called this out in our Discord this morning. I called it out right here. Once we got past the mid-range, roughly the middle of it, roughly the middle of this gap, if you spend too much time over the mid-range, typically you just lose it. So I called it out right here at 418 on the money. I said, I'm going to buy some SPY 425 calls for the third week of June. I put it in my options profit calculator. It gave me just enough risk to reward where I felt comfortable jumping in at a spot that I thought was decent. I thought it was pretty good. And it would also offer me basically a 3-to-1 risk to reward. I'd make 300% on those calls if we hit this red line 430, which again is our August 2022 high, by the third week of June. So I felt like it was a nice combination of, a time-sensitive play. It gave me enough time to actually see the trade through without having to worry about it. And I think there was enough sort of like meat on the bone where it felt like it was worth risking the principal. So basically I bought some contracts at 418. I got them at $2.50 per contract, actually $2.53 per contract. And at the close, I think they were up about 30 or 40%. So doing pretty well on those, really like what I'm seeing. And I mean, quite frankly, I don't really see a reason to be overly bearish here. I think there's signs of bearishness that, we can point to, but on an intraday basis, the technicals I think are really driving this market. The fact that I can long SPY because we basically flip the mid range of a daily gap and make 50% on some 4-week or 3-week till expiration calls, I think is proof of that. The fact that we have deca-billions, if not trillions of dollars of flows that are trading kind of like crypto altcoins, truthfully. So anyways, I'm really enjoying it. It's been fun to trade, but I mean, I think that truthfully, there's a lot more reasons to be bullish in the short term. And if we want to talk about some of the fundamental reasons, well, as of this morning, on Fed Watcher tool, there was the market was pricing in a 70% likelihood of a pause at the June FOMC meeting, which is in 13 days. 70% probability of a pause within the next 2 weeks. Now, historically speaking, if we go back and we look at Fed pauses and interest rate decisions specifically, but when the Fed gets done with its rate hiking cycle, historically there's been a small window of time where risk can perform extremely well. Now, the question we have to ask ourselves is the market already pricing in the pause? Is what we're seeing right now, and is what we were seeing, the past 30 to 60 days, quite frankly, I mean, really all year, risk has performed extremely well. Is what we've already seen the market basically out in front of its skis pricing in the pause, or is that something separate? Is that the labor market remaining resilient? Is that, this engineered recession not being able to come to fruition because there's just simply too much money out there and people are still employed? And now we're about to get a pause and have an absolute face ripper on top of the face ripper we've already had. There's a lot of questions. It's hard to speculate exactly where we are. Hindsight's always going to be 2020. We'll look back in 3 to 6 months and go, wow, that was so obvious that was going to happen. But either way, just from a technical perspective, I'm playing it level by level. I'm not willing to necessarily buy anything for the long term here, but I'm most certainly willing to speculate on rallies from a technical perspective. And as someone that I have a lot of respect for on Twitter always says, there's people renting the rally. I don't really want to own the rally right now, but I will happily rent the rally. And it's working. So if there's going to be upside, whether it's upside for the next decade, and we're about to start a new secular bull market, and last year was just some sort of like complex and aggressive sell off, we're actually still in a huge tech and AI bull market, um, or it's just very short lived, maybe another 3 to 12 months of upward price action. I don't feel I don't feel convicted enough to actually invest for the long term here. For me, it feels much more comfortable knowing that okay, if we are going to get, fundamental bullish catalyst here, which is the pause, if we get a serious move to the upside, as long as the technicals continue to work and we can trade level by level, I'm not going to be missing out on this move. I can make plenty of money playing upside week by week, month by month, without having to position myself for a new 10-year secular bull market. And I plan to do so. But anyways, those are some opening remarks for me. There's a lot to discuss today. I want to talk about your play, Tucker, your energy play. I want to talk about bonds because we're starting to see that market wake up as well. But just generally, man, how are you? I'm not gonna start the way we start our Discord. I'm not gonna start the same way that we start our Discord calls. But how are you, man? What are you seeing in the markets? And what do you think about what happened today?
That was an eerily similar intro to the Giga Shed call. Um, but yeah, no, I'm good. I'm good. I'm looking over here. I'm looking at SPX on the monthly. And just while you were talking, I was kind of zooming out a little bit. Um, and I mean, this is what I like to use for momentum, right? This is one of my momentum indicators. And okay, so I'll get into some more stuff, but let me break this down real quick. So basically, both of these two bear markets, and if I go back even farther and I put it, make it nice, right? We get these big blue waves down here with these big green dots, right? Right here, right here. Here's my issue with where we're at right now. Uh we haven't gotten that yet, right? We've gotten this little wave, which I usually treat as like a kind of a pop up wave, but it usually doesn't signify a bottom from my experience. So what I'm kind of anticipating, and this is the monthly time frame, obviously, so keep that in mind. But what I'm kind of anticipating is for this to keep going maybe a little bit higher, maybe 100, 200 points higher. And then probably roll back over probably near the end of the year because there's a few other factors I'm looking at. While I do think in the short term we can probably continue up, there's some things like like the TGA refill we talked about the other day, the student loan repayments that are going to be coming up in August, I believe. Um, and honestly, just a plethora of more economic data that suggests that the economy is going to be hitting some pretty significant headwinds going into the second half of the year. And my original thought was that coming out of 2022, um, we would see more of a sell off in the first half of the year and a recovery in the second, but that timeline has gotten pushed down the road where we've seen risk rally in the first half of the year, and now I'm kind of expecting probably Q1 of next year, Q4, that we really get a sell off. And we just kind of continue to float up here. And if I come down onto some lower time frames, we can kind of see evidence of that. And like you talked about, this structure kind of looking like QQQ before it took out its August high. Looking down here, that would you know validate that. I would say I think we could probably go a little bit higher.
Question.
Uh,
I have a question for you about that oscillator on the bottom. Is that basically like stochastic RSI? Like I feel like I'm looking at stochastic right now. Have you ever
a,
overlaid the two? I'm just trying to understand how it works.
it's a little bit closer to MACD. is what
Okay.
it's closer to.
Gotcha.
But yeah, so basically this yellow line is it incorporates the VWAP, and it when it crosses above zero, that's when you get the dot, the green or the red dot. The green, like this green and this red, is money flow technically, and I find it divergences within that to be like much more powerful than divergences between the momentum waves, these blue waves. So you can kind of treat the momentum waves like RSI. Like if I drop onto like the 4 hour, if it'll load, basically if you get, it's the same thing as RSI, right? Like if you get we might be getting one now actually. You can, I kind of like to do this where you can kind of do that. That's probably a, that's probably a, we might get a little rollover on that, but you can see the money flow wants to come up and VWAP still above zero. So I don't know. It's just a nice little oscillator I use in Confluence with just basic price action trading. But um, yeah, like I said, I think, if we are going to push up higher, like we were talking about the other day, I like some individuals, I like some small caps, and I like obviously IWM, the index. But what you were referring to earlier, it's not exactly an energy play. It's more like a, I don't want to say EV, but they're a battery manufacturer, ENVX and Novix, and I wrote a premium article on them 2 weeks ago for our Giga Chads and our newsletter subscribers. They got that, but so I won't go into too much detail. But I love the fundamentals. I love the leader of the company and what their production looks like. Also, I like the chart. A few things on the chart that I just like to look at, just a basic normie trend line. Looks like we got a breakout. Obviously, trend lines are pretty subject to interpretation. So, take that with a grain of salt. But in addition, seeing a good bit of volume come in over here. And let's see.
That
Yeah.
the normie trend line can sometimes be like a little bit deceitful, but that one
Yeah.
looks like such a clean break. I can't help but admire it.
I know. I tried to draw it a few ways. Like I took it from this high up here, and then if you connect it to this one, we haven't really gotten it yet. That one we have, those we have, but I wanted to
That's
line it
the
up with,
issue with them is like they're so subjective. But if
yeah,
you can try to be as fair as possible with them, usually it works out pretty well.
yeah, no, because I saw like all these down here, and then you can kind of line it up with let's see, line it up with those, right? So that's kind of where I settled on it. But yeah, no, I think the chart looks good. Um, yeah, I like the momentum on it too. But yeah, so that's one I've been buying. I've been buying pretty much all throughout here. So my average is probably somewhere in like the 12, upper 12s maybe. So I'm up a little bit on it, but I think this one's going a lot higher. I use the order blocks for some price targets, but I don't know if I had a fib drawn on here, but I like the like premise talks about, right. I like that 1618 breakout up at $60. That would be a that
So let
would
me
be a
ask you
cool.
some questions about Anovix. Maybe I can't remember if you said this already. What's the market cap of it? Do they pay a dividend? And exactly what's going to take it up there to 60? Besides
Yeah.
just a huge technical squeeze, which is a fine answer too. I mean, everything can just squeeze because it looks good. But
Yeah, no. So their market cap is, what is it, 2.29 billion right now. Um, no dividend. I think they're running negative EPS, which is fine for a young company. But basically what I've been looking at with them, and somebody who talked about this like a long, long time ago, which is when I started paying attention, was actually our friend RJR, who um normally is known as kind of the perma bear, but he was talking about a Novix like months and months and months ago. So I started to take a look, and basically they've scaled their manufacturing for their batteries. And if you look into their batteries, they're some of the best batteries in the world, and they make them for all sorts of like different handheld devices, computers, laptops, and EVs. So if you kind of look at the trend and where we're going um, with EVs and also handhelds, and just using smaller devices in general, iPads, all that kind of stuff, like the people who, I mean, they're basically selling shovels is what they're doing, right? They're making the parts that are needed in all these devices that we're going to continue to have demand for. So on a fundamental level, I think they're decently undervalued, because I dug pretty deep into their product, and it actually is better than I expected. So it's a combination of things. It's a I think fundamentally at $14 they're undervalued, but also I like the chart. So I think it's not necessarily a trade setup, but I like it as a buy and hold for sure.
I like it, man. You were telling me to buy the other day, and unfortunately, I kind of slept on it. I'm not gonna lie, I was focused on other things. But I think if the move that you're looking for actually plays out, there's plenty of room to the upside. It's like you could probably wait for like a clean breakout and then retest of that 0.236 fib right there at like 15, give or take.
Yeah, you can get something like that.
Yeah, yeah, exactly. I think there's plenty of meat left on it, so I really like it. I definitely
Yeah, there's a nice daily gap like right here at like $17. So I would expect, yeah, I mean, I would expect if we got up here and did something like that, we'd probably hit some resistance up in here before but
sure.
we'll see. I like it. But yeah, I mean, other than that, I think there was yeah, I mean, look at the VIX, man. Wow. I mean, geez. 15
Well,
handle again. That's tough. Just what
what's
we
the
were talking about,
lowest?
yeah.
What's the lowest the VIX has ever been? Can you go back?
Ever?
Yeah, I want to see if we're gonna make new lows here.
No, it's $8.
Okay, can you
Looks like-
can you pull up a chart below VIX of like the S&P 500 or Nasdaq, just one of the major indexes, or put it
yeah,
below it instead? Actually,
get rid of that.
let's
Okay.
see
So what
like
are we
where we can you draw vertical lines at the okay. That's
at the lows?
It looks like it's yeah, let's see. Vertical lines or at the
Here's the
very
low.
yeah, the very lows for the VIX.
The low. Here's a decent low. This one you got a little pullback though. You went from 2,500 to 2,800, and then you sold off back to 2,500. Basically, you got that spike, but
Yeah.
I guess which one's back here? Can't even really see it, but yeah, I mean, I think what is it? Technically, under 15, you're in a bull market, or I think that's what they classify it as. So
Well, it certainly feels like we're trying. Um
yeah,
it's funny, man. I
doesn't look
remember
good.
like I think it was like a month ago we saw like a nine-figure bet on some crazy VIX strike. Do you remember the one I'm talking about? I think you told me about
Yeah,
it.
I told you about it. The nine-figure one, I think, was on like VIX like 90s, but there was another big one for VIX 180s,
So
which was
somebody was
just,
literally betting on the biggest crash of all time.
yeah, somebody was betting the VIX was gonna like go up here, which it's obviously never done. So yeah, that's not gonna happen. But I mean, this is what I look at, and this always tempers my bullishness if I get too bullish in the short term.
But the question
Just,
is like, okay, so we understand that historically speaking, as the 10-year minus the 3-month yields begin to uninvert, historically that has been a really reliable sort of recession trigger. But what if people still have jobs? Is this time different? I don't know. I
Yeah, well, no, you got to look at '08 too. Look at '08. We started the uninversion and we went up still, right? Like there was
what
still
percentage do we
upside.
go up?
We went up 15%
Yeah.
from when it bottomed. So I don't know if it's like bottomed here or not, but I mean, if we say that it's bottomed here, where's that candle? I mean, I took it from the other low. So I mean, what's 15%? Like 40. That would be
Yeah.
those March highs I was talking about last year. I mean, that would be or yesterday, but March highs from last year, yeah. Um, so
And it just I see we have a question here from Temet from Temet. Um said, "Where's Wabi? Is that Wabi?" Nope, this is not Wabi. This is Tucker. This is not Wabi.
Bobby's much stronger and larger than I am.
Yeah, Wabi's an animal, man. Wabi is like cracks the sidewalks, man. He's like the Hulk.
Yeah.
Yeah, a true specimen. But yeah, I mean, I guess I mean, you're pretty strong too, Tucker. But I mean, not Wabi strong.
I'm no
That's
Wobby. I'm
yeah,
no Wobby.
no, yeah, no. This is hey Temet, this is Tucker. This is Tucker, man. But yeah, anyways,
But look at 2000, right? I mean, it was basically straight down. So I know it'd be interesting to try to figure out what was different here and here, right? And factor unemployment into it. I mean, I guess maybe you could even what's the ticker for that?
USIR.
Yeah, USIRR.
Wait, no,
That's
that's
inflation.
inflation. We could pull that up too. You could just put up unemployment rate. That's fine too.
Okay, let's put that above.
See,
Okay.
that's what throws me off is that with
Yeah.
this new, ever digitalized economy where, I mean, we're prime examples of it, right? We're not working a normal job that existed, back in 2006 to 2010. We're sitting here on YouTube streaming, talking about, so we're making money streaming. Granted, not very much for a very small channel, but you know what I mean. Like, here we are
Yeah.
trying to make money on YouTube, getting started, talking about our profession where we actually make money, which is clicking buttons online, being our own stockbroker. You couldn't be your own stockbroker until, I mean, I think I was in high school when you could really start like effectively and efficiently trading on your own. Before that, I
Yeah.
mean, everybody had like their own broker that they'd call and they'd charge them $350 to like buy a share of Apple. It's like, um, it's a different world. So my only caveat to all of this is, what if unemployment stays under 4% this entire time? What if?
Yeah. What was the you remember what Matt on Twitter always says? What's he say? Like in January of 2008 or 7, was it 2007 right before? Yeah. No, 2008. January 2008, unemployment was at like 4% already, and we didn't get the crash until the end of that year, right? And
Mm-hmm.
unemployment now is at like 3 something. So he's the point I think he's trying to impress upon people is like we're far away from a market crash slash recession by throwing that stat out.
Matt ended up being very correct. Like, Matt was
Oh
spot
yeah,
on. I remember doubting him. I was like, Matt, the recession's coming. Like, 2023 calendar rolls over. Like, we're gonna be in like a textbook recession. He was right, man. He made a killing this year.
mm-hmm.
He did really really well. Um, but I am not in the camp that we completely avoid the recession. I just don't know how bad it can get if we see unemployment, remain as low as it is. I mean, the job market is just so resilient. But actually, we do have our friend Parga in here, man. Pargali, he said, Hagrid, can you guys check uninversion at 1.6%, both in 2001 and 2008? That's when stock markets nuked. So maybe can you mark out 1.6%?
Yeah, so I've got zero marked. Let me mark out 1.6.
Thanks for being here, Parga, man. It's great to have you here, man. I'd love to have you on here sometime. I don't know if you docs or not, but would love to have you on and we could have a nice discussion. Always welcome, of course. Um, all right, so let's see. Can you draw some vertical lines for when they intersect the horizontal and the?
Yeah, so let's see. Right here.
Mhm.
Maybe, well, I mean, we first, that's kind of, that's
Let's do
1 point.
official break, not like a wick or whatever. Yeah.
Yeah, that was an official break. That one got up above it and nuked through, and then, I mean, it really broke right there. I mean, that was like the day of the crash here. This one is kind of difficult to get a read on because I mean, you really started the crash like when you it was like 2.3 when you really fell off a cliff right here. So I don't know. I was trying to figure that out too when I was looking at this chart like months ago. I was like, okay, I know the uninversion starts everything, but like at what point does it actually start nuking? Um, so yeah, I mean 1.6 looks pretty good, at least in 2000. Oh 08 though, I'd probably say. I mean, I guess from the top, you're lower. You're like 0.75. From this one, you're at like 2. So yeah, it's tough to say, but I mean you gotta get it above zero. That's where I'm at. If you're just gonna ballpark it, you gotta get it back above zero. So
Yeah. Yeah, and if you guys have any questions, you guys watching, please feel free to ask. I guess if you come in here to to just kind of like troll the comments, I guess you're welcome to do that too. But yeah, I guess I had to get rid of a couple guys. They seem familiar. They definitely seem familiar. Their tone
sure
seems
they are
familiar, Tucker.
familiar.
But I gave them a chance, man. I let them say their piece, but yeah, not super constructive.
It's over for them.
Yeah, not super. Let me see.
I guess
Tom Harvey, our
Arga,
man. What did Tom say? He said, "Temet, you're missing an N in your name between the O and the C."
what is it?
M N. I don't know, but we love Tom.
We do.
Parga said unemployment 6% does apply for both in 2001 and 2008. So I mean, Parga makes a good point, man. He really does. I mean, it's probably not about actually trying to buy the bottom of sort of this like uninversion, or I guess short. It's not. It's not necessarily the best idea, even if the 10-year minus the 3 month has actually bottomed in its inversion. It makes much more sense to wait for confirmation, I guess, that confirmed break or uninversion process to begin on a break of 1.5 to 1.6%. So yeah, I mean, Parga, appreciate you bringing that up, man.
Okay, what I'm seeing is okay, if we take like I'm just gonna get rid of this and this. If we just look at unemployment, like this, if we call that kind of the top before the nuke, like okay, we had to get unemployment around 4.5 in 2000, and then in 2008 we had to get it to like 5.5.
Yeah, and
So
then
I don't know if you could call it a trend and say we needed it 6.5 before we nuke this time, but it's just
yeah, we got to make
it's
higher highs on
speculation.
unemployment. I mean, I really think the only thing holding it together this far is that people simply have jobs. And I guess that maybe there's a lot more money out there than people have thought. Premise has given a really good example of like, okay, well, they gave us $10, 2 years ago. And then last year, they took back five. It's like, well, we still have a net gain of five. We still have so much money in circulation that I mean, look, dude, we're seeing this type of speculation. Quite frankly, it's gambling in the crypto markets as well. I mean, look what happened with Pauly, who's like the Pepe spokesperson online. I mean, he dropped an ETH address, an ERC20 address, and he literally said, "Send money here" or "Send ETH here." Dude's at like probably close to $1.5 million now. I checked last night; it was at like 1.1 million. So I'm assuming he's probably higher now. But there is so much money out there right now. I mean, people are speculating on altcoins right now, and for that reason you have to remain protected, assuming that this type of activity continues. It can just take so much longer. What are you looking at,
Yeah,
M2?
I was gonna pull up M2.
We had
Yeah.
a question here from Jesse M. Quick. The feelings about everyone hedging with puts is keeping the market from falling. Yeah, I would say so. I mean, people, if they're not, well, I mean, look, it's constant fuel for this uptrend. I mean, the decay that these puts are experiencing is real. And if people just continually hedge whatever maybe long exposure they have with shorter dated puts, they're just getting burned. They're just getting burned to zero every single day. So yeah, in the short term, I think it's absolutely throwing gasoline on the fire. Um, yeah, 100%. Absolutely. It's like people need to stop shorting it aggressively on every bounce up. Like, momentum is not something you necessarily want to just step in front of blindly, especially when it's in this type of environment, which is, the books are thinner than they were a few years ago. Um, there's definitely less liquidity, and that's measurable. I mean, if we're looking at the decrease in M2, I mean, I think we had the largest month over month drop in M2. Um, I can't remember the
Yeah,
exact
we
date. I don't want to
did.
butcher it, but it's a significant drop month over month. Point being, so it's trading like it. That's the reason we're seeing these crazy squeezes where people are renting rallies. They're aping into very short dated, expiration type of contracts. We call them the zero DTE boys, 0 day till expiration boys, and it's already a relatively thin order book. You could have like a couple funds orchestrate a huge 2-3% squeeze just from playing days till expiration options. And at the same time, I believe it's actually favorable for them to continue to rent these rallies with very short dated contracts. It has something to do with their risk management for funds, where if you own something, if it's like a day trade and you own it for less than, I think it's less than just 1 day, it's favorable for your risk compliance, where you don't have to actually like disclose it because you don't actually own it. Somebody that understands like the like the legal and regulatory, like the framework around hedge funds and family offices, was talking to me about. I don't remember it exactly, but people are taking advantage of it, and they're just arbitraging the crap out of some of these premiums. But anyways, Tucker, I see you've got the U.S. Central Bank balance sheet up. It looks like.
Yeah, no, I was just going through some of the liquidity stuff that I look at occasionally, and we've got the Fed balance sheet almost back to pre-BTFP levels, which was March, obviously, when we had the banking debacle, right?
Mm-hmm.
Uh, I guess one more thing just to follow up on what you were saying. I heard Joe Carlos there say the other day that by the end of this year, we'll only have chewed through, like the consumer will only have chewed through half of the savings that they got from COVID. So,
See, that's what that was, that thing that Premise mentioned, where it's like if I gave
yeah,
you $10, so $10 in stimulus or savings accrued during that 6 month freebie period, and then I take back half of it, it's like it's still a net gain. We're still
yeah,
better off. Yeah.
yeah. So that was kind of a wild stat because I would have expected people to spend more of their money, I guess. Just whatever. But yeah, so I mean, as long as this continues to fall, right? As long as we continue to have QT, as long as this continues to fall, right? M2, like I have to be high time frame bearish, even though like I'm same as Max. Like I'll rent the rally, right? I've bought calls, I've bought common, I've actually bought shares, which is you could argue isn't even renting the rally, but right, like as long as these are looking the way they are, and I guess net liquidity. Let's go do that real quick. Net liquidity actually doesn't look bad. I know we had some fuckery with this. Uh, I think this was manipulation at the end of the year. No,
It was
when
that
was it?
drop right
Yeah,
there, and yeah,
this
it was
one.
that
Yeah,
drop. Yeah, that I don't believe that that was accurate. I think
yeah.
Dr. Jeff
So
had explained to us that that
it's
was sort of
probably just like that. Yeah.
yeah.
So I mean, this is you know, it's in an uptrend. Like it looks like it. I'm not gonna chart. I'm not gonna chart that liquidity. That's too. I mean, I guess Premise charted. What he charted CPI. Is that right?
Yeah, yeah, he put some fibs on CPI, funny enough.
Yeah, and they hit. I'm pretty sure, but yeah, I mean, as long as this is kind of like what I guess if we are gonna do a little bit of TA on it, as long as it's under like here, yeah. And maybe we get a nice little retest and then come back. But yeah, I mean, unless the Fed starts printing money, I think the liquidity headwinds from all over the place are probably going to be too much to give us more than like a couple hundred points on the S&P, right? But I think some sectors can definitely outperform. But I don't know, the when I was talking about the TGA refill yesterday, I was doing a little research. It really matters how they refill the TGA. Because if they do it by issuing a bunch of T bills or bonds, right? One or the other, like either they're going to issue long duration bonds or bills, which I believe are like short term, because you got bills, you got notes, and you got bonds. So it's kind of a nightmare to figure out which one. But I think bills are the super short term ones, like 2, 3, 4, 5 month T bills. Um, if they refill the TGA by issuing bills, I think the argument is that it will have less of an impact on the market than it would if they were issuing a bunch of long duration bonds. Specifically for the BB community, I would much rather them not issue a bunch of new bonds. Um,
Why would that be?
I mean, because
Okay, here's
we're
a question I have for you then, because I don't understand the mechanics of it. I'm not sure if you've thought about this as well. Do does the issuance of new bonds actually affect the value of existing bonds, or is the value of existing bonds only dependent on the rate attached to the new issuance? Because it's not like we're talking about dilution necessarily. We're talking, I mean, the reason that, old bonds would go down in value or up in value isn't necessarily dependent on the supply, right? There's an unlimited issuance of these bonds, unless I'm mistaken. Do you know?
I think it is because like this is what happened when I can't remember who was saying it, but like um the Fed lied, the banks died, right? The Fed was like, we're not gonna hike interest rates for 3 years. And then they sold all these banks a bunch of long duration bonds, and then they ripped interest rates to 5%, and all the banks got nuked, is what happened, right? So I think when they issue new bonds, it does affect the price. It's not just like the rate or the yield that the bonds are getting. I mean, it literally, I think, is like, even though they can issue an unlimited amount, when they add supply to the market, I think it is like I don't know if it's a dilution situation, but it shouldn't help the price. Like I think it is what you were saying. Um, like I think it will hurt the price if they issue a like. It depends on how many they issue, right? If they issue like 5%, it's not going to be a big deal. But if they,
Parga, if you're in the comments, can you consult us on this? Because I want to make
yeah,
sure that we're viewing this correctly.
yeah,
Is the
definitely.
value of bonds at all dependent on the issuance of new bonds, assuming the rate is the same. That's kind of what we're talking about, because we obviously understand that the value of older notes would go up and down depending on what the rate of the new issued ones are. But does the supply or new issuance of notes, does it affect the underlying value of older notes? I don't know, but if anybody out there does know, please confirm with us. Um, but Tucker, one thing I wanted to discuss, and you and I have spent a little bit of time privately talking about this, is a potential sort of secular rotation into small caps. And just from like a value investing perspective, there's a lot of really good deals out there. A lot of companies that, are under, let's just say under $50 billion market caps, that they're making money, they're trading at relatively digestible PEs, and they're sort of being overlooked because people are just tripping over themselves to basically buy 10 names in the entire stock market. And you and I have talked about this a little bit, but I'd like to just sort of dive into, what this rotation into small caps could look like, and if so, how do we capitalize on it? And by the way, full disclosure, I do own a little bit of ARK, so I want to just like disclose going into this conversation. I own a little bit of ARK from a little bit lower than here. I own some Rivian, just like a one-off that one of our analysts, Will's Outlook, he basically explained it to me, so I liked it. So I own some ARK, I own some Rivian, um, but I think there's potentially like a huge play coming, or like one final like big squeeze in the Russell. So I just want to talk about what that rotation might look like, Tucker.
Yeah. Yeah, I think if you let's see. I think we will probably get a rotation into the Russell and some of the companies that are in it, obviously. So what I would be looking for is and here's the caveat is a lot of the Russell is full of shitcos. It's just a fact.
I think I saw
But
that like 30% of them were kind of like ghost companies. Or like
yeah,
they're
like
just
like
like
half of them are like zombie companies that
yeah,
don't even like do anything. But
yeah.
uh yeah, like finding, like we played myself and Will's out, like we're playing Palantir, like where's the gap in the chart?
Dude, that looks like the arc chart. I'm just gonna say like that.
Yeah, where's the earnings? Yeah.
Yeah, wow, look at that.
Yeah. I bought calls right here and I sold them right here like an idiot. I should have rolled them.
No, you know
But
what you did? You did the right thing and you did the wrong thing. You took profits. The wrong thing you did is you didn't leave a moon bag and just say fuck
I
it,
know.
forget it.
I know. I know. So I mean I like Palantir. I also own some Rivian. I own Enovix, obviously. I think that's another good small cap that people could look at. But I think just like good names that are in the Russell that are actually like if you do just like the smallest amount of fundamental research, you can find some good names in the Russell. Um, but that's kind of the balancing act, right? Is like some of these companies that don't do anything will pump anyways, and some of them want. It's like crypto, right? It's like it's like Pepe will pump and Chainlink will, but Chainlink has great utility and it's awesome. And like your favorite altcoin uh that has a bunch of utility, whatever, won't pump, and like some of these, whatever, you get the point, right?
Yeah.
So it's hard to figure out what will, but I generally go with trying to find some good names that I think will do well and catch the rotation. But I mean, beyond Palantir, Rivian, I know our man Will's Outlook was looking at Zoom. The chart is so ugly; it is kind of a must bid, honestly, right? But
Here, I want to show you this. All right, let me pop over here. Oh wait,
yeah, yeah,
dang it, you can't see my screen, man. That is
gonna
such.
just have to describe it in great detail.
All right, follow me on your chart. I want to do the TA though for everybody over here. All right, so I've got ARC pulled up. And
All right.
what I'm going to do is I'm going to pair it with Palantir on the very bottom, on a new pane on the very bottom. And then I'm going to go from line chart to actually candles. And here's what I'll say is if you don't like playing individual names because of the inherent risk of like one company not moving, and you are looking for a basket, this top chart here, I'm looking at it on the weekly for ARC. Basically, drawing a horizontal line at 35.10. Besides that one deviation right in the middle, we've just been sitting and basing there. So the question you have to ask yourself is we've spent a year basically ranging and potentially accumulating. And yes, there's some stuff in ARC that I'm not so fond of for the long term, but from a technical setup, this looks pretty dang good. And I've got Palantir sitting right below it, and it did that same basing structure, guys. It did that same exact, like even to the deviation. I gotta make this light. It did the same little deviation that ARC did. It's like it's just leading ARC, And I think it's potentially indicative of a larger move that is to come, maybe even market wide, where we talked early on in the show about the potential of the S&P 500 making a run at 4350, 4400, really taking out that August 2022 high, while at the same time, like we mentioned from our friend Parga in the comments, as the 10-year minus the 3 months begins its disinversion process, as it makes its trek up to 1.5% or 1.2%, there's a window of time where the Fed can pause, the yield curve can uninvert, and we can see all of this money that's been thrown like crazy at blue chips or mega cap tech into some of these distressed companies. And one more thing I'd like to point out, and let me see if I can pull this up here quick. This would be kind of a, all right, we're going to do it. We're going to do it. We're going to have fun on the show. We're going to do it. It's going to take just a little bit of time, but let me do this. We're going to pull this up. So let me get rid of Palantir, and let me go back to watch list. What we're going to do is we're going to throw the S&P 500. We're just going to throw SPX. We're going to throw SPX on here. What is this fractal? Oh dear. Oh, this is a bear market from the 1930s. Don't worry about that. That was an interesting fractal.
You still got ARC up there?
No, I got rid of ARC now. So we're looking at the S&P 500. And what I'm going to do is I'm going to pull up Amazon. Amazon was not in the S&P 500 at this time. It joined a few years later, full disclosure. But at the time, it was a small cap, similar to Palantir or some of the names in ARC. Now let's go back here. We got to throw Amazon in log view. We're going to have to throw the S&P 500 in log view as well. And we are going to go to the monthly time frame. Now we're going to look at the dot-com bubble. Okay. Now, Amazon global bottomed right here. Amazon global bottomed. Let me make this blue. Amazon global bottomed roughly, early Q4 of 2001. Actually, let me go to the lower time frame to provide a little bit more specific levels and time. All right, here we go. So during the dot-com crash, Amazon bottomed, looks like October 2nd of 2001. The S&P 500 had a small rally out of that, but the day that Amazon bottomed, that same level, before the S&P 500, which again, Amazon was not in at the time. Amazon was not in. Oops, let me just change these colors a little bit. Give me a second. Nope, that's not what I want. Label background. The S&P 500 bottomed 380 days later. 375 days later. So the S&P 500 bottomed over a year after Amazon bottomed during the dot-com crash. During that same time, from that 1 year where Amazon bottomed, Amazon rallied 260% while the S&P 500 drained 28%. So I put this out there to illustrate to you guys that yes, we could still have a recession. The S&P 500 could still go down 28%, just like we're looking at this example here. While certain individual names or small caps that are promising and making money but have been overlooked because they seem inherently more risky while we're potentially heading into a recession are just sitting there on the floor. And then I go back and I look at a company like ARK and I say, is it possible that some of these companies in ARK or ARK itself have just bottomed a year or two before the larger indexes? It's possible. It's a scenario that I'm entertaining. We've seen it before. Here's a perfect example. A company that was not in the S&P 500 during the dot-com crash bottomed a year before the S&P 500. During that time, it went up 260%, while the S&P 500 went down almost 30%. So let's go back to ARK now. And just take a look at it. You tell me if this is something that you're potentially interested. Is this something that you're potentially interested in shorting down here? This looks coiled and ready to pop, in my opinion. I could certainly be wrong, but just from a technical perspective, it looks pretty damn good. And not to mention, the largest holding within ARK, Tesla. I've got Tesla pulled up now. Tesla doesn't look bad either. Tesla does not look bad. I think the valuation is obscene. I don't think I'll ever be able to justify it. It's a revolutionary company, and I'm a fan of Elon. I don't think this is value, but just from a pure technical perspective, this looks pretty dang good. And then you look at a company like Zoom. Me and Tucker are literally here on Zoom right now. Granted, we're streaming to YouTube, but like that's what our video is hooked up through. I pay for Zoom. Office space is getting absolutely destroyed right now. I used to be in real estate. I have contacts in the office and retail sect, and they are getting absolutely destroyed. Vacancies like crazy, rents down across the boards. They can't give out office space. They can't give out 3 months free office space. They literally can't do it. So I look at a company like Zoom and I say, okay, this is a real company. We've basically retraced the entire pump, the entire IPO COVID pump. We're back floored. Like Tucker, if you go on, I know you can't see. We got to figure this out how you can see it. But
No, I know. I've there's one fundamental argument against Zoom, and that's that their tech is not patented at all, obviously. So the worry is that like Google and Microsoft and Apple and whoever, like the big guys, will just like take their tech and like, you know,
oh,
make it
they can, and
or-
I don't
yeah.
like that argument though. The reason I don't like that argument is Tesla's a prime example of that, where they release all of their blueprints to the public, and they say, you know what, if somebody can do it better than us, then go ahead and do it. With Zoom, it's like I guess I don't know if they're like entirely open source or they're just not patented, right? But it's like video calling was around before Zoom took off. You know, like we could video conference call. Why is Zoom so popular? Part of it's the name, I think. Part of it's the branding, and it's just got like it's got first player advantage in like mainstream corporate video conferencing adoption. You know, where it's become so accessible and easy, and it's like it's become a household name where you think about a company like Kleenex, right? And it's like, oh, could I have a Kleenex when your nose is runny? No, you want a tissue, but you call it a Kleenex, you know? It's like, oh, let's get on like a video call. Oh, can you send the Zoom link? Should we Zoom? It's like it's got that same level of power behind it. Whether it's deserved or not, I don't know. But there is Google Meet, there's Microsoft, whatever. I can't even get it to work on my computer. They've done it. I'm not going to sit here and be like a Zoom maxi, and I think this was a bubble. But we've retraced the entire IPO and COVID pump. This thing's sitting on the floor. This is a real company, is making money. We're sitting here right now on Zoom. I mean, come on, all time high. Are we ever going back to $590 per share? I don't know. I don't.
No.
Unless they get a Pentagon contract. I don't think so. Or we get a coronavirus round two. But are you telling me we can't do a little bit of like mean reversion or echo bubble? Come on, it's the second largest holding. I believe it's the second largest holding in ARK. You know, Roku doesn't look half bad. Same exact thing. It's like a lot of these companies, these aren't zombie companies, but they're not your cream of the crop, like always gonna be there. Google, Microsoft, whatever. But these are the largest companies in ARK, and they look just floored to me, just from a technical perspective. I mean, they look like an altcoin whose dev just rugged the project, and it's just sitting there. Like, I'm looking at Teladoc right now, and it's literally sitting there, and I'm like, we've seen Luna pump 200%, and it's dead. Give me the Teladoc pump. You think there aren't degenerates gambling in the stock market as well? You're out of your mind, man. Those are the real degenerates. So I don't know. I don't want to spend too much more time talking about
Yeah. No,
ARK,
I
but
mean,
it's. Go ahead.
look at this. Switch it back real quick. Can you see mine?
Yes.
Same thing we're talking about. Look at that. Same thing with Amazon and the S&P, Bitcoin and Matic. Same exact thing.
Uh huh.
Bottomed in June. A lot of these altcoins bottomed in June. Well, not a lot, but a few bottomed in June. And I am skeptical that we get back. Well, maybe not at this point actually, but it would take a lot, I think, for it to get back to 33 cents. But yeah, I just had that pulled up. It's the same situation. Like some things are gonna bottom before others. It's like growth that just gets hammered. Like didn't Tesla do the same thing, right? Tesla bottomed before the S&P. Well, I don't think it's bottomed, but before the S&P hit its October lows, I believe,
I believe
maybe.
so.
Yeah. So I mean, let's just see real quick. Let's see below. Let's see. Oh, it bottomed after. See, that is
But I
interesting.
think there was some FUD there with Tesla, and also I think it was an attack on him because he was trying to get the Twitter deal done. I remember seeing tweet storms coming out where it was like Elon, borrowed money against his shares. Like this is his margin call level on Tesla. I feel like there was some like
Mm.
attempt at some sort of like
There was
hostile
some FUD.
takeover of, yeah, I don't know exactly what it was, but there was a, I mean, that was a full on capitulation right there. And I remember
Yeah,
talking about that being like, I don't really want to own Tesla, but if we get down to like, I think it was like $80, I was like, I'll just buy some. I didn't
I
really
mean
want to
the
own it.
the targets people were calling for down here were like $20, $25, and we were sitting at 100, and that pretty much marked the bottom. But I remember some of our BB community members and one of our BB mods was absolutely making a killing trading Tesla in like
Oh yeah.
late December, early January, just like would post Robinhood screenshots of plus 1,000% on 0 day options trading Tesla. But yeah, I don't know. So I guess that one was fun, but no, I agree. Some of these growth stocks definitely probably bottomed, before the S&P inevitably will. But um, yeah. So in general, I think a rotation in the small caps is probably due, especially if we get a pause rally. Um, so yeah, I mean, there's nothing like scooping some floors. So be on the lookout.
You gotta try, man. I mean, look, if the S&P 500 makes a run at 43 to 4400, there was a lot of money made on the last QQQ rally. So maybe we see a rotation in the S&P 500, and then it lines up with a Fed pause within a couple weeks. And then the question you have to ask yourself is, can we get an echo bubble in some of these growth companies, these speculative growth companies, small cap companies? I think yes. I think a lot of them have literally 100% to give. I'm not necessarily talking about ARK. I think ARK has some room to go, but there's some individual names that we're watching that I think potentially have 100% to go in some sort of echo bubble. We saw it in crypto. It can happen in equities as well. Well, I think we could probably call it here. We've been going for a little bit over an hour here. Want to leave something to talk about tomorrow. But guys, if you are here for the first time, we are, because Bitcoin, we are a financial media company with a very heavy emphasis on digital assets. I would just ask, if you are new here, please hit that like button. Apparently, it's really helpful for the YouTube algo. And additionally, if you enjoyed the show, please consider subscribing. It just takes 1 second. We're going to be doing these every single day, hopefully multiple videos every single day. We're just kind of getting into the swing of things. We'll be hitting it really hard here as well. We've got a really great team that's focused on growing the YouTube and providing some really elevated and high quality content for you guys on a daily basis. So please consider subscribing to the channel, and please give us a like on this video if you enjoyed it. And I guess also if you didn't enjoy it, please consider liking it if you would. Just a quick reminder, you will see right here, we are, in honor of Memorial Day, issuing 1 free week of our premium Discord channel. We are in there all day. We had a really awesome day today trading. I know some of our guys took a SPY play, and I actually see some of them here in the chat. So shout out to all of our BB Giga Chads. And it's 1 week for free, guys. Give it a try. It doesn't cost you any money. Come in. If you hate it, you leave. If you like it, maybe you'll consider staying. But give it a try. It's 1 week for free. Link down below. But yeah, that's all I have. Tucker, anything else to say before we log off here?
Last thing, I was just looking at Zoom. They have never missed earnings ever. So it's a little interesting tidbit I just noticed when I pulled it up. But
When's their next earnings?
their next earnings is August. So we got some time, but they've never missed. So it's probably a decent little earnings play that we might be running on Zoom. But yeah, if you like what you saw,
I'm gonna spec on that one for sure.
spec. I'll have some. I'll hit the options chain for the boys. Don't worry.
If you see some crazy dark pool prints or something like that, it's probably us.
Yeah.
All right, guys. Thanks for being here. Thanks for tuning in. Just a quick reminder, please like and subscribe if you would. It means a lot to us. We notice everybody that does. We don't have that many subscribers here yet. We're a brand new channel. Haven't been around that long, so it would be great to see that number tick up. Thanks for tuning in, and we'll be back tomorrow at the same time.